Hello everybody, and welcome to this new video entitled The 10 Best Stocks in My Portfolio, my top 10 positions. I haven't done this video in 2 weeks, so this is my update as far as the valuation of all these stocks go. And remember that I do these videos mostly for new viewers of the channel. So if you're not a new viewer of the channel, all you may want to take a look is at the updated valuation on these metrics on my top 10 stocks. These are the updated valuations. Not much has changed. HIMS is still the cheapest stock I have ever seen in a very long time, and StoneCo is the second cheapest. Frankly, they are pretty similar as far as how cheap they are. Main difference is StoneCo makes quite a bit of cash. HIMS is not there yet, but HIMS grows faster. That's really the cheapest stock. Then, in my view, of course, if you're new to the channel, in my view, my best stocks that I own are Tesla, Enphase, and then Bitcoin. And Bitcoin is my bond alternative. So I own Bitcoin. It's a bond alternative. It's my second largest position if we talk about assets. But if we talk about stocks only, my second largest position is Enphase. Number one is Tesla. And roughly, you can see the rank right here as to how they rank in my portfolio. So yeah, I'm pretty darn bullish on HIMS. I am pretty darn bullish on HIMS. Like MercadoLibre, I like StoneCo, I like Crowdstrike, SoFi. SoFi I like very much right now. I like it a little better than Nubank right now. And then Airbnb is a stock that I seem to be the only one to like, but that's okay. That's okay. So let me get started and tell you about how I do things on this channel and how I invest differently if you're new to the channel. If you're not new, you've already seen this. But how do I do these things on the channel? How do I do things? Well, I try to beat monetary inflation. In my view, monetary inflation is 15% a year. I define monetary inflation as how many new dollars are created through the commercial banking system each year and through the primary money issuance system, the Fed issuing money, but the Fed is not issuing money right now, but they'll be forced to issue way more money to buy these bonds. So primary money creation will come back. Right now, money creation only comes from a commercial banking system, which is lending way less, but don't be fooled. The flattening of the M2 is just temporary, and it will shoot right back up. And also a thing that people always forget to talk about is that there's not just the US financial system that create dollars. The euro-dollar system is very opaque and is bigger than the M2 system, right? It's bigger than the US financial system, and this opaque euro-dollar system also contributes to the dilution of the euro-dollar because dollars held abroad make their way back to the US through trade of various kinds. And so this is also often something we forget. Focusing only on M2 is not the way to do it. You gotta focus on dollars around the world in all of the offshore places. So anyways, I consider it to be 15%. It used to be less when I did my data over a 50-year period. It used to be 7%. Then since 2007, 2008, 11 to 12%. Now I believe we've entered the era of 15% monetary inflation. So I must beat 15% monetary inflation. That's why I named the channel Beat the Denominator. The denominator to be beat is the growth in that denominator. It's that 15%. If a stock does not take in 15% more dollars each year, it is drowning relative to the denominator. That's the denominator. So that's why I want my revenue growth to be much higher than that. I want my revenue growth to be 30%, because if my revenue growth is 30%, then that means the stock that I own are gaining in 15% extra revenue on top of the denominator expansion. So your real return is 15% if you have a 30% return, and your real return is 0% if you have a 15% return, right? So 30% equals 50%, 15% equals 0%. Or in other words, 30% nominal return is the new 15% real return, right? So I remove the monetary inflation. So that's why I don't have a choice. In order to get these returns, I have to get stocks that grow much faster than the economy. I have to get stocks that grow much faster than monetary expansion. So that's why 30% is my threshold. And where am I going to find this? Well, the only way that I can find stocks that grow this much is by investing in hyper-growth stocks, by investing in innovation stocks. And so this is my style of investing. My style of investing is I try to look at mega trends, and I try to invest in trends before they become mainstream. Why? Because when a company has a product or service that is well within a mega trend, what you tend to see is product adoption. These technologies get adopted, and I try to get in when a stock is showing signs of adoption, when their product is getting adopted as seen through the lens of revenue growth, as seen through the proxy of revenue growth. And I try to sell once the market is saturated and the product becomes much more common. That has always been my style of investing. That is the way I do it. I invest in these mega trends because when you get into the center of that S-curve, that is when you're getting those 30% revenue growth compounded over 10 years, over maybe 15 years. That is what I'm looking for. And of course, by the time price to earnings ratios and these traditional value metric ratios start to matter, the stocks tend to be mature and they don't grow as fast. And so if the stock is mature, then I'm not interested in owning it. I want to own stocks that are up and coming, that are growing really fast. And of course, when I say 30% or 50% or 33% here, whatever, why do I consider that to be very close to the rate of return? Because if you assume that the price to sales ratio of the stock does not change, if you assume that price to sales ratio stays constant, the return in revenue growth is also the return that you earn on the stock. Now, I know what you're going to say. You're going to say there's going to be a price to sales ratio compression. As firms mature, there is a compression in the price to sales ratio. Well, that is true. Except that right now we are in a very depressed price to sales ratio environment. None of these stocks are trading like they were trading a year and a half, 2 years ago. And I realize that a lot of people think 2 years ago or a year and a half ago were times of irrational exuberance. But keep in mind, my assumption is that the monetary printing that we saw 2 years ago is nothing compared to the monetary printing that we're going to have in 2024 and in 2025 when the Treasury has to issue $2 trillion worth of bonds with no buyers or very little buyers. Right? Japan's buying a little bit. That's it. There's very, very few buyers of bonds. So there's going to be a QE like we've never seen before. So in my view, these valuations compared to the cost of money and how low the cost of money is going to get because the government's going to have to be financed, that cost of money is going to be so low that I expect these price to sales ratio to really expand, if that makes some sense. Right? These price to sales ratio, they're based on the cost of money. My assumption here is very clear. It hasn't changed a single bit since I've been investing and since I've started this channel a year ago now. It's the QE to infinity thesis is the main thesis, and I believe it is just math, and there is no way that the US or the West in general will choose a deleveraging. There is no way they will choose the way of Japan. The way of Japan will be chosen. And if the way of Japan is chosen, those price to sales ratio we saw in 2022, we're going to get back there, and we're going to exceed them. That is what I think. So I'm consistent with my thoughts. This is not a value investing channel. I want to be very clear. This is not a value investing channel. This is a growth investing channel. And we take into account the value of money in this channel, the cost of money, right? That is decided by the Fed. But the Fed is going to have its hands forced, in my view. Anyways, now that I've gotten the macro out of the way, and I know people don't like macro too much, let me talk about individual stocks and why I love these individual stocks for my portfolio. So Tesla is about 30%, a little more now that it went up in value recently over the past week. Tesla is about 30% of my portfolio. Why do I own Tesla? Right, we are at 5% adoption of cars in most countries. Actually, worldwide, when you look at the statistics, I've seen statistics as high as 15% of new car sales. If you look on a quarterly basis, not on a trailing 12 month, but on a quarterly basis, I've seen as much as 18% of the sales being electric cars. Electric cars are not a fad. They're gonna get adopted. They're gonna be the main product. And if they are the main product, remember that Tesla is more dominant in electric cars than Apple was ever dominant in the smartphone space. Right? It still has a market share between 60 and 70% in the US, depending on which quarter you look. That's still the market share. Right? In China, electric cars are everywhere. In Europe, they're slowly becoming to be everywhere, even though Teslas are big for Europe. So we see fewer Teslas, but Tesla will eventually come out with a Model 2, which will be better suited for the European market, if that makes sense. Electric is revolutionizing cars, and to me, a couple of Chinese manufacturers and Tesla are pretty much the only ones that can survive, in my view, and that are well suited to survive. And a lot of analysts are saying Toyota may also make it. But it's very obvious that the competition is not coming. The competition from the European car makers, not coming. The competition from the US car makers, not coming. This is very, very, very obvious. You can't keep losing money without going bankrupt unless you end up having state-sponsored cars, and these cars are financed from the government, but otherwise you can't. So to me, electric cars are going to get adopted, and of course, I'm very confident in Tesla. Tesla is a 10x better product. What I mean by 10x better is, of course, it is 10 times cheaper to fuel, and that is the big selling point. But you have to ask yourself, how many times better is a Tesla? Well, there's a lot of things that make Teslas many single orders of magnitude better. So how many components in a Tesla are 10 times better, right? 10 times fewer moving parts, actually more like 100 times fewer moving parts, right? Acceleration. Is acceleration 10 times faster? Well, it depends on the model you get, but for some models, yes, acceleration is 10 times faster. They drive like sports car, right? Do they last much longer? Well, they do. You may remember the early days of Tesla, the 1,000,000-mile warranty. Tesla was selling with a 1,000,000-mile warranty. What's the benefit of a car that drives itself when it eventually does? Is it 100 times better, or is it 10 times better, or is it 1,000 times better? I guess it depends on whether you like to drive or not. But it's definitely at least one order. I would argue at least 2 orders of magnitude better, a car that drives itself. So when products are 10 times better, they get adopted, and every single product is sold, and that is what is happening to Tesla. Every single product they make is sold. Demand is not a problem, which is why they don't advertise. They don't need to advertise. The consumer is already there. And if you look at the long-term returns of Tesla, what do you see? You see that in nominal returns, we are at 53% compounded annual return each year, 53% for 10 years. And my guess is that if they grow revenue at 50%, right? Like I'm assuming they keep growing revenue at 50%, and that revenue growth number is a proxy from what they've guided on delivery growth, which they've noted are 50%. So I'm kind of using the decrease in average sales price. I am assuming that there will be a similar increase in software uptake. We saw yesterday they're releasing new wraps and new colors for the cars at $7,000 or $8,000. There's going to be a lot of margin going on from other areas than just cars. So I'm just assuming this blanket flat 50% rate and 50% growth rate. And you also have to assume that Tesla will raise prices again as soon as interest rates drop, right? Because when interest rates drop, demand will go back up. Tesla will always adjust the price of the car to the demand. And, I'm very confident in this company. It's I put my money where my mouth is. It's right about 35% of the portfolio now. So, and I want more. I wish we got that drop, but we don't have that drop. That drop is not coming. So anyways, the market is recognizing Tesla as the leader here. Let me move on to Enphase. So I love Enphase very much. The reason why I love Enphase is because, of course, whenever you deal with providing a product to a consumer, you typically have a much bigger market than a B2B in general, right? In general, the consumer-facing firm is a much bigger market. And so that's why Enphase, in my view, is the leader in residential-facing solar, right? The microinverter technology, in my view, is the best technology for residential because it is much safer for residential, right? Microinverters became a thing because solar panels needed to be grid tied, so they needed to be able to shut off in case of a fire or in case of an emergency. So that's why microinverters emerged. Like, I understand that central inverters, like those sold by Solar Edge, and I understand that DC systems in general, Fronius, SMA, I understand that those are better for commercial installations. And when you're in a commercial installation, you don't care about having 5,000, 10,000, 50,000 watts DC go through your factory because nobody lives there. But when you live in your house, I do believe that most people are going to be comfortable with AC coupled system. AC coupled system is what we use with, and that's what Enphase sells. Enphase is the leaders in AC coupled systems, which are technologies that we've known for 100 years and that I believe are best suited for residential. And that's why we're doing so well in residential solar. As a reminder, Enphase does not sell solar panels. I consider solar panels to be a bad investment in the field of solar. I think a better investment is investing in the technology that's going to run the home, that is the microinverter or the inverter, but in the case of Enphase, the microinverter, that turns electricity from DC into AC, i.e. turns electricity that's not usable into usable electricity. Enphase and SolarEdge are the duopoly in their space. And I do believe that Enphase has the technically superior position, and the market is with me. If you look at the returns of Enphase, it is, depending on how you look at it, the second or the third best performing stock in the S&P 500. And so I find this stock very compelling. I cover Enphase a lot on this channel. So obviously, in a few minutes, I can't go into any depth on this stock, but that's not the topic. That's not the goal of this video. The goal of this video is not to go into any depth. All right, let me talk about HIMS. I love HIMS very much. Why do I love HIMS? We have long-term guidance on HIMS. What does HIMS do? HIMS is an e-doctor, an e-pharmacy without insurance. So it's a disruptor of three different worlds: the doctor's world, the pharmacy world, and the insurance world. And it's an e-doctor and e-pharmacy. So how do we prevent most diseases, or how do we cure most ailments that we may have? Well, you may know that 70 to 80% of whatever health issues one may have is typically cured by pharmacy, cured by pills, all sorts of compounds, all sorts of pills. That's typically how most issues are solved. And so then you got to ask the question, if we cure most problems through drugs, through pharmacy, why do we need to pay for healthcare systems who are real estate empires? And why do we need to pay for medical office buildings that cost a fortune? And why do we need to see the doctors in person when, like I said, 70% of everything that you'll ever do with a doctor is a prescription for a pill? And the answer to that is you don't. You don't need any of this legacy system because you can do everything through an app, except for the 20 to 30% that's going to be done by the traditional healthcare system. So HIMS is disrupting the healthcare system by taking the cash cow away from the traditional healthcare system and providing it through a much cheaper way, that is using an app, that is connecting you to a doctor through an app, then that is prescribing you, if the doctor sees fit, prescribing you for a drug. And then, of course, you do this fully outside of the insurance complex. Why? Because HIMS has 2 automated pharmacy warehouses that can ship the product to you, right? In one day, you get the product shipped to you. So you don't need the 45,000 pharmacies that there are in the United States. It's true, there's 45,000 pharmacies in the US. You don't need those if you just ship through warehouses. They're a retail location, they're retail pharmacies. Do we need retail pharmacies in the era of online shopping? I don't think so. So you collapse those costs, and then you don't need the medical office buildings. You don't need to have the doctor living in your town, the cost of living of your town. You can do everything remotely. The doctors are much more efficient, right? They don't have to deal with a lot of issues that they deal in face-to-face. So you remove costs everywhere. And when you remove costs everywhere, then you entirely remove the need for health insurance. That's why HIMSS, for many products that they sell, they are cheaper than copays. Cheaper than copays, right? That's crazy when you're a company like that. So I think it's a highly disruptive company, highly misunderstood company, misunderstood by the market, but not misunderstood by the customers. If you look at the growth of this company, it is stunning growth. The product is really catching the US by storm. This is a very, very popular product. I follow the traffic visits, the website visits, the app, how many people download the app, the reviews. They're really a victim of their success, and we'll see where this company goes. But I'm very bullish in this company. This is my fourth biggest position, and right now it's cheap. Right now, HIMSS is very, very, very cheap. It has more than halved since its peak 6 months ago. So I very much love HIMSS, and there will be EBITDA profitability coming up within the next quarters too for HIMSS. So, maybe the market will reset the stock, maybe it won't. We'll see. But moving on to a stock that has been entirely reset by the market and that I've been actively selling, and most of my sales of Palantir actually have been to buy more Enphase, because if you express Palantir's if you express Enphase stock in terms of Palantir price, Enphase is 5 times cheaper right now. Like literally, with a recent increase in Palantir over the past few days, Enphase is literally 5 times cheaper than Palantir relative to a year ago. Because Enphase, has lost 55-60% of its value, and Palantir has went up like crazy. So Palantir, I keep my position because I believe in the fundamental proposition of a company over a long run. To me, I've always loved this company because of their leadership in the military. And of course, why is the stock up over the past few days? Because of their leadership in the military. That has always been the key product for them, and it is their main product. And yes, we are seeing a little bit of success on their commercial product, but not nearly as much as they had hoped. And Palantir, I think what's so important is the next quarter, right? The next conference call is going to be a must listen. Right? Is that growth hype, or is that growth actually happening? And if that growth is actually happening, if we see a clear pickup in the Gotham software, then I will likely stop selling and keep that stock. But I never want to be completely out of that stock, mostly because it was founded by Peter Thiel. Peter Thiel, member of the PayPal mafia, like Elon Musk, right, worked together at PayPal, and they have a full understanding of the principles of offering a product that is one order of magnitude better. They're those that popularized the idea that you don't even need to compete if your product is so good. And of course, people who follow Palantir know that the product is that good, but I'm not an insider, right? From what I can see, I think the product is pretty good, but I'm not an insider in the space, so I can't be 100% sure the product is that good, right? Tesla, I know enough about cars. I've been driving, ever since I was 16, so I know a lot about cars, and I can tell you, yes, Tesla, I know they are 10 times better than gas cars. That I know. I know the benefit. Palantir, it's tougher to know as an outsider. So that's why I think it's not. Anyways, to me it's not as big of a bet as Tesla, but I see a lot of value, and clearly right now the stock price is giving a lot of bullish sentiment on the stock. Right, it's creating a aura around this stock right now. This stock is becoming back in fashion, and it could stay a while like that. So, anyways. Crowdstrike now gave us impressive, let's call it 6-year ARR guidance. So what that means is that 39%, 35%, 40% revenue growth year after year has been signaled by the CEO to last 6 to 7 years, which is going to be insane. So if the price to sales on Crowdstrike does not move, this is a great sign of confidence when the CEO gives guidance out until 2029. I absolutely love this. It removes a lot of uncertainty. I've been adding back actually to Crowdstrike. Crowdstrike, I believe, based on everything I know about the company and read about the company, to me, they will be the leading cloud-based security system, i.e. an endpoint security system that is a sort of antivirus, a modern-day antivirus for your computer that is connected to the cloud. And it's all about the network for Crowdstrike. Whenever there is a breach on one of the computers of the network, every single computer connected to the cloud antivirus is getting an update or getting a warning, or something is done through AI to stop those breaches. And of course, in that field, the company that wins is the company that has the most data. That's the company that wins, the one that has the most data. And CrowdStrike is the leader, the early mover, and thus they have the most data. And I believe that flywheel will continue for them because they have the most data, so they always have the best product. And since they have the best product, they have the most customers. It's a virtuous cycle, and I'm very, very positive about CrowdStrike. I like the company very much. Moving on to MercadoLibre. MercadoLibre is the leading e-commerce website in Latin America and in Brazil. Brazil is their biggest market. I believe investing in MercadoLibre is kind of like buying an Alibaba or an Amazon in 2007, except this business is in Latin America. And if I'm going to invest abroad, I've been burnt on Chinese companies before, for example. It's these are tougher markets to understand. India is a tougher market to understand. I believe Latin America is a much easier market for me to understand, right? It's not that far off from Western culture. It's actually very, very similar. There's a lot of similarities in the way so much is done in in Latin America, and I'm very happy to invest in Latin America. I believe the understanding that we have of this world, that I have of this international market, is much greater, and perhaps that's because I live in Texas and a great proximity to Latin America. But anyways, this is a company that has been a great at execution. Right, they've been around for almost 20 years. The ARR before we've had that crash was 35%. Right now, if you go up to the crash that we've had in the stock price, so right now we are at a 27% ARR. I think this is a company that is going to offer in returns, in yearly returns at 30% going forward. This is as much as a steady Eddy as you can get, in my view. This stock is just chugging along in my portfolio and requires very little research, and it's comfortable. Buying MercadoLibre feels great. Like, it's a comfortable stock. Like, there's not a lot of bear sentiment against MercadoLibre. It's just a cozy stock to own. I don't know how to explain it, like Enphase, Palantir, HIMS, Bitcoin. Like daily, you have to check your thesis because people tell you it's the worst investment ever, you're going to lose everything. That doesn't happen with MercadoLibre. MercadoLibre is like flying under the radar. It's just a great company. Oh, and last thing I'll say about MercadoLibre, they have outstanding execution in some tough markets like Argentina. Right, so Argentina has 100% inflation, but they are growing at 150% in Argentina, which is fascinating. So anyways, I love MercadoLibre very much. Let's move on to StoneCo. StoneCo is a personal favorite of mine. It seems like I think I'm one of a few like StoneCo, but not a lot of people seem to like StoneCo online. I don't understand why StoneCo is so cheap. StoneCo is a stock that fits both the criteria of Warren Buffett and Cathie Wood, because it's a very profitable company. I often joke that they're in the cash piling business. Actually, their EBITDA yield is in the 30%, which is insane, right? But they are also showing extremely high revenue growth at 45% revenue growth. So that's outstanding revenue growth, outstanding margins. and there's a lot of great things going for StoneCo, and they're also in a quasi duopoly with Pax Securo, a little bit of competition from MercadoLibre, but it's not like I mind because I have a big position in MercadoLibre, so I'm not gonna care if they compete against each other. I'm not really gonna care because I benefit from MercadoLibre. I would rather they don't. I would rather they don't and they get along. And most of the time, that's kind of what you see in this payment space. 3 million small businesses in Brazil, roughly, use their payment terminal, and that is growing and growing and growing. So they have more people who use these payment terminals, and Brazilians love to pay with credit cards, and of course, for small businesses to accept credit cards and move away from cash, they need these payment terminals. That is where StoneCo comes in. I consider it kind of a Square of Brazil and kind of buying Square in 2014 or 2015 in the US. Love StoneCo very much. Let me move on to SoFi. So SoFi, lots of coverage online. So I don't want to say much about SoFi, but just know the grand goal of SoFi is to be a top 10 financial institution by market cap by 2030. And so that's an outstanding goal, and that'd be an outstanding return. And what matters for SoFi is looking at their member growth. Their how many customers do they have? Like what's the growth? How many customers are growing? And you can see you're still growing the number of customers, 44%, 46%, 51%, 61%. So what? It's kind of a steady eddy, right? Of course, the law of large number is going to make it so that they can't grow at 60% all the time. But in Q3 is it going to be 42%, and then Q4 is it going to be 40%, and then 38, 36. You get where I'm headed with this, and of course, as the number of customers or the number of members grow, what's going to pick up the growth in revenue for that company is how many products they have. So it's the whole idea of the cross-selling. You're going to be able to cross-sell much more, to cross-sell across different products. So this is how you can get exponential growth sometimes in a company, because not only do you get more customers, but your new customers and your existing customers also buy more each year. So if you multiply the number of new customers, growth in new customers, and you multiply that by growth in average revenue per customers, right? Your famous ARPU. If you do that multiplication, sometimes you can get exponential. If you're growing on both sides of a multiplication, you can get to some exponential growth. And I love SoFi very much for this. And let me finish with Airbnb. Airbnb is the disruptor of hotels. They're way on their way to disrupting hotels. Latest call, they said they were at about 10% disruption of the hotel space. They'll disrupt much more, in my view. Why do they disrupt much more? Why can they disrupt much more? Because they exploit pre-existing capital. They actually don't have to build a network of hotels like many chains do. I mean, even though many chains sometimes separate their real estate from their operational companies, and also you have a lot of independent and franchisees. But there's still a lot of capital that has to be expanded either by franchisees or by hotel real estate companies. This capital has to be expanded to build the hotels. This is not something that you get when people are renting their house. It's a house that they typically already own, and maybe they used to have a long-term rental, but they had a problem with, say, a tenant that they couldn't evict or anything like that, and then boom, once that happened, you have an Airbnb customer for life, because Airbnb is that layer of trust. Airbnb, what does Airbnb sell? Like any platform. Platforms sell trust. Airbnb sells trust. That guarantee, they have a $3 million and a $1 million guarantee. You have a rating system, right? The rating system is more important than everything, right? If you rent your house for a few nights to, say, a couple, and that couple has a 5-star out of 5-star rating, and it's got 70 ratings on Airbnb, trust is going to be there. So platforms like Airbnb monetize trust. And I'm not even getting into the other benefits of Airbnb. For example, it's the best cost product. Oftentimes with Airbnb, you can get a full house. You can rent a full house for the cost of a hotel room, because hotel rooms are nickel and diming you. I don't know if you've been to a hotel recently, but so many hotels have things like resort fees, like parking. Like even if you're in the middle of nowhere, sometimes they charge parking. It's crazy. Like you have all of these, and they call it ancillary fees. And if you follow hotel annual reports and hotel conference calls, are like, oh yeah, we hope to make a lot of money on ancillary fees. Oh yes, we've moved our resort fee from $35 to $45. Right? That's nickel and diming. Airbnb has a few issues with that, namely the cleaning fee is often an issue that comes up. But if you follow Airbnb, you know that every 6 months, Airbnb does a big update and addresses all of the concerns of the hosts. And Brian Chesky has been on a quest to try to deal with these issues of, say, the cleaning fees and try to reduce all of these fees. And so I believe that while one share of the industry is trying to tack on ancillary fees to try to make it more expensive and make more profits now, Airbnb is taking the opposite direction. Like there's this whole campaign right now at Airbnb to try to get back to the roots of Airbnb and try to get people to rent a spare bedroom, right? Anyways, I think this is a company that has much more explosive growth going ahead. This is also a company that creates a lot of induced demand. It creates its own demand by collapsing prices, right? It's not always taking away demand from say, high-end hotels. It also creates a new demand for travel that did not exist because all of a sudden you have an option for a family to travel whereas there was no option before, because the option before was to get 2 or 3 hotel rooms and pay all of these fees and it was too expensive. Now with Airbnb you have an option to rent a whole house, which is actually cheaper and ends up being a best cost, right? There's a lot of explosive growth in my view for Airbnb that could be coming. So many other benefits, very popular among Gen Z, millennials, and of course Gen Z and millennials obviously are the future, right? That's the next generation. Businesses trade based on future expectations, right? So you need to cater to, you can't be Harley Davidson, right? Harley Davidson is a company that is dying. Why? Because its customer base can't buy bikes anymore, right? And they've never recruited new customers. All of these companies are actively recruiting new customers and customers of the future, right? But this is why you invest. It's stock prices, right? The old finance quote is stock prices is the present value of future cash flows. What is the present value of future cash flows? Well, your future cash flows are going to come from customers of the future. They're not going to come from customers of the past, right? If people want cheap accommodation today, they don't go to the motel anymore. They rent a room on Airbnb. At least that is my view of the world. And I'll finish with the last stock, which is not a stock, but you could own it in the form of a stock, like MicroStrategy. If you own MicroStrategy, it's a proxy for Bitcoin. So there's what I call layer 4 instruments, where you're 4 times removed from the raw asset of Bitcoin would be buying a stock on your broker, right? But you still get exposure if you own a stock like MicroStrategy. I have MicroStrategy, a little bit of exposure. I like MicroStrategy because you can do margin on MicroStrategy. You can borrow against it. You can write options against it. There's a lot of benefits to MicroStrategy. But of course, I still believe the best way to own Bitcoin is in a brain wallet. You own it in your brain, you memorize 12 words, and you own it in your head. And that's it. I think it's the best way to own Bitcoin. You actually own it this way. That's how this technology is intended to work. But just like email, most of us, we don't configure a Outlook software with SMTP and IMAP, and we enter a port number and all of that, and we get the email technology directly on our laptop on a software. Most of us don't do that anymore, right? We use third-party. Bitcoin, in my view, is going to move to a system where you have intermediaries and third-party, and this is where people we call Bitcoin maxis get very upset because they're like, okay, well, it wasn't supposed to be like that. Well, yes, but some people are just not going to be as technologically advanced or not comfortable just storing money in the form of free speech, right? In the form of speech, because that's money as speech. That's what Bitcoin is. When you can store, say, $1 billion in your head just by memorizing a few words, That's money as speech, and speech has this advantage that is extremely protected. It's highly protected. Having speech is highly protected. Anyways, the reason why I own Bitcoin is my bond alternative is the only asset that is not a derivative of a US dollar. Right? This is not an asset like a stock, for example, is a derivative of a US dollar because the value of a stock is based on how many more US dollars you're going to get. Right? A bond is also a derivative of a US dollar because your return is going to be based on the inflation of those dollars and how many dollars are out there. And if you know anything about Bitcoin, you know that Bitcoiners, oftentimes you'll go on social media, you'll see trending 1 Bitcoin equals 1 Bitcoin. Well, 1 Bitcoin equals 1 Bitcoin is a call for people to think about the world in Bitcoin and not think about the world in US dollars, right? US dollars are just the denominator, and they're not an indication of value because, of course, there's many more US dollars being issued year after year after year. Big benefit of Bitcoin, and this is the only asset that I know that is like this, is that unlike bonds, but I should say also unlike stocks, it has no counterparty risk. It has no counterparty risk, right? Because you own it, you own it in your head. Like take another asset, for example, that one could say has no counterparty risk is you own gold. Like you have a gold ingot or gold coins in your pocket. There's no counterparty risk, except there is a security risk, right? Someone could steal your gold. That's a security risk. Well, with Bitcoin, that can't happen. If you store it in your head and if you have proper security, you can't have your Bitcoin stolen unless somebody breaks the wall of encrypted energy that is mining. And it's impossible to break mining, and well, it would technically be possible to break mining, but you would need so much power, and you would need so many computers. I've done a calculation in a separate videos about this. You need like $20 billion of computer equipment, and by the way, $20 billion of equipment, you need to make it appear in like a matter of 2 weeks, and it would need to be the latest, and actually, in fact, you find out that to do that, it's nearly impossible to make it appear in a matter of 2 weeks. So, because of course, if by the time you acquire so much computing equipment, so much specialized mining equipment, the industry will have moved on, and you'll never catch on because mining gets stronger and stronger and stronger. So that's why we say Bitcoin is the strongest cybersecurity we have. To break the Bitcoin system, you would need to overcome that energy. That's the concept of proof of work. That's why proof of stake can't work, because proof of stake can be corrupted, but proof of work, you can't really corrupt it because you need to spend insane amounts of energy that even nations don't have. It's kind of like the internet. You can't really stop the internet. Bitcoin is kind of like the same way. I don't want to get too deep into the weeds. This is not a Bitcoin channel. Just know that Bitcoin is schmuck insurance in case the USD becomes like the Bolivar or the Argentinian peso or the Turkish lira. It's insurance against all of this, and I'm very happy to own Bitcoin. Very, very much happy to own Bitcoin. I've been on and off involved in Bitcoin since 2015. Actually, made the mistake, like most Bitcoiners, I've made the mistake of selling Bitcoin very early for very cheap, and getting out and getting back in. And this is an experience that you'll find for so many Bitcoiners. But it's why like this is the asset that I know I'll never sell. I know I'll never sell this asset, and I think I'm not the only one like this. Oh, and I'll finish. Total returns, right? Look at GBTC. So GBTC is the closest thing of what we have to an ETF, right? It's a fund. It's a fund that trades either at a premium or at a discount. It's been trading at a discount lately. But even if you bought it early in 2015 when there was a premium, your average annual return on Bitcoin would have been 78%. So 78% is quite insane as a return. So anyways, this was not investment advice at all, ever. This is just entertainment and no investment advice here. Just entertainment. I hope you were entertained. Please like, please subscribe. Thanks for watching. If you're new to the channel, thanks for coming and checking out what I have to say. I know I've made a lot of videos lately, but have a wonderful day, and thanks for watching, and no investment advice.